Okay, how you guys doing today? Been quite of a interesting day actually. Woke up this morning to the news that Charlie Cricky, not too sure how to pronounce his surname, got shot on a rally into a university. And that just shows how bad the society is at the moment. It's really unfortunately to see that happening on US, such a, as they claim to be the biggest economy and the biggest and the best country in the world. As I say, I don't believe so. It doesn't mean that you have money that you are good. It doesn't mean that you have the biggest land that you are good. Lots of other places don't have money, but they're still happy because no one is killing each other because of politics. So it's really, really unfortunately to see that, to be honest. But what can we do? What can we do? Anyways, so today is Thursday, and we're gonna be going through what just happened over the week, and also what is going to happen today with the RBA. Not RBA, the ECB rate decision. Now you guys can see my screen. That's good. So we're going to be talking about the US PPI that we had yesterday, and also the ECB rate decision. Okay, so we're going to be having the ECB rate decision tonight. So it's going to be pretty interesting to see how we're going to go. Now, let's go to the FinLogic's economic calendar first, and then go into the USA only. So only selected USA. And then from here, we can see the PPI, right? So that was yesterday. So today's Thursday, so that was yesterday. And we can basically see and clearly see that it came in negative, okay? So quite of an interesting scenario actually is that the PPI is coming negative, okay? So the core and also the nominal CPI, if we look into the 5-year period or even all, they tend to be, somewhere between averaging around 0.13%. Not negative, very few times negative, like we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 18, 19, 20, 21 times. That's pretty nothing since 2015. So it's basically twice a year, okay? If we do an average, a median average would be twice a year that the PPI comes negative. So what does that show? So the PPI is basically the CPI, but for the producers, okay? So let me see if I have a nice image to show you guys. Maybe like that. I was hoping to have an image like we have for the CPI, like this one. So that's the producer price index. You have the PPI components, you have the leading economic indicator, you have the influence on monetary policy, you have volatility and seasonality, international comparisons, examples, whatever. So basically, the PPI is exactly the same thing as the CPI, but for the producers. So CPI stands for Consumer Price Index, and PPI stands for Producer Price Index. Okay, so let's say you have a like a manufacturing. You're manufacturing something. and that that actually you are doing pen, okay? Then the cost of the pen goes up for you. Will you pay from your pocket, or would you pay? Or would you put this into the price for the end consumer to pay? Well, you're a business, you're not a charity, so you want to make profit. So you put into someone's to pay, and returns used as a profit. So that's exactly what shows the PPI. It's the inflation for the producer, and we can clearly see here that the inflation for the month of August didn't had anything. Okay, it was literally negative 0.1% inflation. The highest that we got this year was actually 0.9, because when we look at the PPI, it was pretty much big times negative. Like we had 1, 2, 3, 4 times this year negative, 1 time at break even, 2 times at break even, and 2 times with positive reading. So it was really like an interesting scenario for this year. And of course, that sort of gave the USD some sort of strength. Okay. So when we go to where is, sorry, I didn't have that open. So when we go to the DXY, we can see that since yesterday, we had some big moves happening. So that shows that it's quite positive, okay, for the USD, because it's good for the society. You know, society won't be paying much of inflationary prices into the products. Therefore, I do highly believe that most likely we will continue to see that influencing the Fed. Okay, so the PPI is negative now, so that means that they don't need to worry about being, into a problem or something like that, because they do have a possibility of having higher chances of cutting the interest rates. And when we look into the CME Fed Watch tool, we can clearly see that happening. Like you come here, and we can see that 92% is of the market is already expecting the Fed to cut. 92%. Okay. So as I've mentioned, it's quite of an interesting reading. I do believe we may have very strong cuts. So around, I'm talking about like 75 base points cut. And that will be by end of this year. Okay. And this will weakness the US dollar quite a bit. Okay. So my target is 97 for the US dollar, for the USD. Okay, cool. Now, the reaction on the euro dollar was quite good for us because it got into the position. And as I say, this position most likely will be stopped out, most likely will come to 1.16, and that will be able to re-enter the trade with a better risk reward and even a better 50% risk reward sort of thing when it comes to 1.18700. So that's going to be quite interesting as well to see. Now, moving on to the ECB, we have ECB just around the corner. We have ECB tonight. Let me just change these to euro area. So we have the ECB tonight, and that's going to be at 2:15 p.m. And then after that, we have the press conference at 2:45 p.m. So I'm really eager to see what Lagarde's going to say. Okay. We all know that he's quite priced in already for a non-changing to the interest rates. So majority of the market is expecting no changes. So previously it was 2%, and the forecast is now again 2%. So there's no big of a move expected to happen into the euro area, into the ECB. That being said, any surprises downward would be negative for the would be positive for the US dollar. For the euro. So any pressures, any surprises downward would be good for the euro. Okay. So if we see, let's say 1.75, that would be pretty great for the euro. Okay. And that being said, we will probably look into conditions of like euro dollar going up to 1.17 again pretty soon. Okay. I know we're trading like 20 pips below 1.17, but still it's quite of an interesting scenario at the moment. Okay. So yeah, that's pretty much it what I have to talk today. You guys know. Yeah, I'm leaving ACY, yes. Is Israel attack on Qatar can affect oil price? I don't think so. I don't think so. It's not the biggest. It's not like I think the ones that really affect the ones that really affect oil prices are somewhere around like away from Qatar, because Qatar it's pretty much in Dubai, so it's more like into Israel. Like if Qatar were attacking Israel, maybe could interfere. Okay. Can I ask you do some technical analysis on the metals? Look, gold is just long. Doesn't have much to talk about technical analysis here. I mean, we've break this resistance, and now we can probably come back down and continue to go up. But I don't think we're gonna come back down. And silver or copper? Let me check again. Silver, yeah, silver is the same thing, but it's just a slower. It's a lower one, but it happens pretty similar. Okay, well then I think that's it for today, guys, and I'll be back next Tuesday. But just trying to cover the main ones. I haven't had anything prepared, so couple last weeks and I'm out, so just trying to take it easy with everyone as well. I hope you guys understand that. So tomorrow is Friday. I'm going to be doing the YouTube videos, and then on Tuesday next week we can have a chat again. All right, not a problem, guys. Have a good day and have a good weekend as well, and I'll chat to you next week. See you all. Bye bye.